You've heard most traders saying price action is king and suddenly develop some type of interest in learning about price action. All I can say is look no further. You've come to the right destination. Welcome back to the channel, everyone. The name is Max Cutler, a show where I teach you everything day trading to keep you profitable on a consistent basis. At the beginning of my trading career, I believed that to be profitable, I have to master all the indicators and strategies available, and my charts were so cluttered with a lot of noise and junk. I later then came to realize that my market analysis got better and better with zero indicators on my charts. Till this very day, I trade on naked charts. It comes with the territory. Once you gain some level of experience, you negate the fluff and stick with what is working. Rather than using chart pattern recognition or applying technical indicators which are derived from moves in price and have a natural lag, price action is about getting to the core bare bones of trading. Hence the need for all beginner traders out there to understand that indicators only react to what the market has already printed. They are basically analyzing past printed data and do not signify a green light, confluence, or confirmation for taking a trade. By studying the movement in price over a set period, you get all the information you need to trade the trends, breakouts, and swings effectively. The fundamental belief of price action analysis is that price is never wrong. So if you are losing money, you are wrong. So your job as a trader is to manage this risk and close the trade. So first and foremost, right, what is this trading strategy and why it works? So now, whether you trade options trading, stocks, forex, futures markets, commodities, etc., you primarily need knowledge on how to trade price action. Before you can now attempt learning about indicators, moving averages, and the like, first, you have to learn the fundamentals surrounding price action. Now, many short-term traders rely solely on market structure and the formations and trends extrapolated from it to making trading decisions. That is whether to take a trade on a buy or sell. Technical analysis, on the other hand, as a practice, is derived from price action since it uses past price in calculations that can be used to inform trading decisions. Now, technical analysts as well and traders use price actions to find an edge in the market. Tools like moving averages, Fibonacci's are also calculated from price action and projected into the future to inform potential trades. Moving on. No chart pattern is more common in trading, trust you me, than the double bottom and double top formation or setup. In fact, this pattern appears so often that it alone may serve as proof positive that price action is not as wildly random as many academics may claim. Now, moving on to the double top setup. As you can see, price did form an upward momentum and then retested this previous high over here, and then it rejected this area, this key level of resistance. Then it formed a bearish candle, signifying the sellers now taking on the baton to push price all the way down. So mainly is characterized by an M shape. It is mainly characterized by an M shape. If you want to identify a double top, it is mainly characterized by an M shape, as you can see the diagram that I've labeled up here. So now, what you'll be waiting to see is to wait for this 3 and 4 signifies this rejections up here. Once you see a rejection like that, you should know that a double top has formed. Let me remove that. Okay, now moving on. The double top setup. Number one, setup confirmation. Notice how the second top was not able to break the high of the first top. The first top, you see, price made a high, price made a low, and then price failed to break this first top right here. So now a resistance was formed, signifying that the sellers now wants to get into the market and dominate. And now we can see what the sellers did. They did manage to dominate the buyers, and then they managed to push price all the way down. From this neckline right here, you are just going to enter your trade about this level right here, anticipating that sellers will continue pushing price down. And this is what you're going to do. You're just going to enter from this level right here and then put your take profit about this end right here. You see where this line is? That's where you're going to put your take profit. And then from that level, you're just going to put your stop loss above this candle right there. And then this is how you're gonna this is how your stop loss is what's gonna look like. And then you enter into a beautiful trade, and then you take your profits home like you are supposed to. Okay, now let's remove that. Number two, now we are going to talk about the entry. With the double top, we would place our entry order below the neckline because we are anticipating a reversal of the uptrend. Okay, as you can see, that was exactly what I was showing you. From this point on, from this below the neckline, just about this current candle breaks the low of the previous bearish candle, you're confidently gonna place a trade going downwards, and then you manage your risk accordingly, and then you chow your money like you're supposed to. Okay, now moving on. Number three, remember that double tops are a trend reversal formation. So you'd want to look for these after there is a strong uptrend. So these are one of the characteristics. Should you want to trade a double top, you'd look for a setup like this. And then remember that double tops are a trend reversal. So you'd certainly want to look for this setup and then possibly form the way you'd want it, and then activate a trade, and then you manage your risk accordingly. Okay, moving on. Bonus tip: you also notice that the drop is approximately the same height as the double top formation. That key level will be significant for setting your profit targets, just as we clarified and illustrated on the chart right now. That's basically what it means. Okay, so as you see this range, for example, this range is approximately 35 pips. The same range is what you're gonna use to set your profit targets. And then about this level right here, and then you just close onto your trade, and then you take your profit. Okay, moving on to the double bottom setup. The double bottom setup is mainly characterized by the W shape. That W shape, when it's forming like that, it signifies that a double bottom is formed. Okay, somebody once reminded me that some traders, they tend to call it two valleys rejecting a key level of support. Okay, now you see this circles right here, they signify that that's a support key level of support, right? As price forms these circles right here, you are confidently certain that a double bottom is about to be fully confirmed. Now let me show you. You see this first leg right here, and then the second leg. and now this third leg, and then you see this fourth leg right here. You see, when there's a railway line forming like that, you have to be confident that a double bottom has formed. And then same applies to the following candles. When they engulf this previous bullish candle, you're confidently gonna uh, enter into a trade about this level. But it's not fully advised that you enter about this level right here, just about this level right here. No, you're just gonna wait for price to breach this area of this neckline there. You see this area right here. Once it breaches off this level, then you're confidently gonna enter into a buy trade going all the way up. You see, all the way up. Right. Okay. Moving on. The double bottom setup. Number one, you'd wait for a setup confirmation. Notice how the second bottom wasn't able to significantly break the first bottom, just as we illustrated on the previous diagram. Price did make a low and then made a high and then made a low, and then as you see this wicks right here, it signifies that price rejected that level and then formed a beautiful bullish candle engulfing the previous bearish candle, and then pushed all the way up. From that point on, you can see that the buyers were confidently coming into the market, pushing the market all the way up, you know. So this was a profitable trade. Once you see a railway line forming like that, you must be sure that the buyers now want to come into the market and push the market all the way up. Number two, entry. With a double bottom, we would place our entry order above the neckline because we are anticipating a reversal of the downtrend. It's self-explanatory, just as it says, you're just going to enter. It's most likely that you enter above the neckline rather than this level right here, because what you'll find sometime, price will just reject this level and then continue pushing price all the way down. So it's most likely that you wait for price to just gain momentum and volume, and trusting and basing your analysis on volume and your setup being confirmed, you're confidently going to enter a trade just above this level right here. It's advisable that you enter a trade just above the neckline rather than when price has just engulfed the previous bearish candle and then anticipating that price will continue pushing all the way up. So it's advised that you enter above the neckline. Self-explanatory, guys. Number three, remember that double bottoms, just like double tops, are trend reversal formations. So you want to look for these after there is a strong downtrend. Moving on to the bonus tip, you'll also notice that the move up is approximately the same height as the double bottom formation. That key level will be significant to setting now your profit targets. Just as we explained with the previous diagram from the double top, the same thing, the same principle you also apply for the double bottom setup, you know. So basically, that's what you should be looking for. I myself can attest that I've used this strategy, and trust me, you will see some good results if you stay consistent with looking for those setups and then entering into a trade. And now that's it for me, guys. Until we meet next time.